So the problem is basically not complying with RBI's norms, and particularly RBI's norm relating to KYC, which is identifying the customer, due diligence in terms of both the customers and the fund they are using. Now, this is not the first time that this problem has come up. 2 years back, approximately, Paytm's payment bank was barred from accepting onboarding new customers. Okay. Now, what they've been told, they've been barred from basically carrying out all banking services. So basically, bank is going to be non-functional as a bank come the deadline of February 29th, which has been given to the bank to basically transfer all their existing customers to new banks. So all transactions that were happening between Paytm payment bank and Paytm wallet will, after February 29th, cease to happen. This problem is a very peculiar one. It's not arisen because of any financial reasons, like in the case of Yes Bank, RBI had done the same thing. That barred the bank from accepting new banking services per se. And even before that, we had a situation of PMC Bank. So that's the crunch of the matter here. There are 2 or 3 direct impacts on Paytm as a company. And Paytm company, which is listed, is One Communication 97, which is the listed company. And Paytm Bank is basically a subsidiary of the listed entity. What has happened is that the RBI action has resulted in a collapse of the share price of Paytm itself. Secondly, it has also created an enormous amount of dissonance between the core customer base of Paytm, because now they're worried, concerned about whether they're able to do their transaction or not. Let me assure the customers that they can continue to do their transaction on the Paytm wallet. The only thing which has been barred is that which has been barred post February 29 is that they will not be able to use the Paytm payment bank account. So Paytm as a wallet or as a service provider continues to function. Third element of impact is that the bank, which was supposed to be so-called the key or the prize that Paytm had, is effectively going to be stopping a bank, post the deadline that the RBI has set for it. Now, coming to the ecosystem impact, Paytm is a celebrated unicorn. It has a celebrated iconic promoter, and it has been continuously running into challenges with the regulator. This is something to say about the maturity of a startup or a unicorn. Paytm is no longer a startup. Okay, it is a listed entity, so it's a matured company, or should act as a matured company. It is also a regulated entity. It is regulated by RBI. Now, when you are a regulated listed entity, the expectations of governance are very different, or the governance levels are much higher than when you are a small startup of, the ecosystem, which is now reacting and saying that the regulator is very harsh and the regulator should not have done that, has to basically temper its criticism, because this is the role of the regulator. The regulator has to enforce the law and has to ensure that every entity follows the law. It cannot change its laws because some new entity still follows the rules of startups, does not follow it. It cannot change it because of that. So startup ecosystem or the fintech ecosystem has to realize that sooner or later they will come into the regulatory purview of an RBI, an IRDA, or one of the many regulators. And if they build systems and processes which are in line with good governance practices, then they will never face the kind of problem that Paytm is facing now. There are a number of lessons here for both fintechs, startups, and listed entities. One is that the rules of the game for startups, which is basically based upon this premise that do things fast and break all the rules, does not work in the long term. It may work when you are a small company or you raised your initial round or two, But after that, you need to start looking at governance. And governance is not just it's a good word. It's a system and process thing. Your system, process, and even the behavior of the promoters have to be in line with governance norms. You can no longer act in a manner that you would have done as a startup company. And this is a lesson which is increasingly coming out, not only in this case, but in many other cases where we have seen governance lapse. Here, this is more than a governance lapse. This is a regulatory lapse. And regulatory lapse are difficult to justify for anybody. Paytm has said that it will suffer a 300 to 500 crore loss. But more than that, now it shows that the organization is facing an execution challenge when it comes to following processes and systems as per regulatory requirements. So, and effectively, it also means that one large part of its service, which was banking services, is no longer going to be functional. So this is a huge debacle both to Paytm, and it also has enormous number of lessons for fintech startups to learn from. So in the case of Paytm, it's a listed entity. It has investors, both retail and institutional. Because of this particular issue, they will all reconsider their investment in Paytm. Paytm will have to go back to these investors and reassure them that it is going to put better systems, processes in place. Paytm would also have to reassure them that the management will be far more proactive to compliance gaps. In the case of Byju's, it is still a non-listed entity. So it has almost the who's who as investors. Every VC fund, private equity, several global private equity fund are invested in Byju's. And Byju's faced not just compliance gaps, it actually had promoters were actually complicit in misappropriating the funds. These are allegations which have been made both by investors and by lenders. The board is trying to evict the promoters there because their continuous interference in management is preventing the company from basically gaining its systems. These two companies were basically iconic companies in the startup, space. One in the edtech space and the other in the fintech space. Everything that their promoters did was followed, by every other entrepreneur in that space. So that sheen is now taken away. These entrepreneurs are no longer seen as beacons of governance or icons of, I would say, Byju, Ravindran is not even seen as an icon of any sort. He is more seen as an icon of, fraud and other things. The startups, need to basically realize that the days of easy money are over. Okay, all of them now face fairly steep challenges in terms of raising funds, and if their management processes or their governance processes are not up to the mark, it is very unlikely that they will be able to raise funds. So if a startup really wants to achieve scale and wants to be respected and be able to be successful in the long term, they should actually work on their compliance and governance processes from day one. I've seen a lot of startups in my own life, which have failed not because of faulty business model or not because of the expertise or the effort made by the promoters, but all because of the fact that they were willing to cut too many corners and they were willing to take too many compliance and governance risks, and that had become the DNA of these startups. So somewhere down the line, startups and promoters and entrepreneurs need to reevaluate what is the DNA that they are building in their company. Because that is the DNA that is irrespective of, whether they are at 1 million or they are at 100 million or they are at a billion or they are at 22 billion valuation. The DNA is very difficult to change. So build a good DNA, build a governance model that is robust, try to build compliance from day one, try to get people on board who are aware and able to do that for you, both at the board level and even at management levels.